Hey traders, Jason here from Levitt Brothers. So in this video, I'm going to do an update of my State of the Market series. I'm going to go through some of the indexes, some of the breath readings to get an idea of what's going on in the market. Before I start, quick announcement. I'll be speaking online for the Money Show in 2 days, on Tuesday, August 20th. So you can sign up for that. There's a link in the show notes below. You can check that out. I'll be talking for about a half an hour about how I trade with the RSI, MACD, and stochastics. It'll be part one of a two-part talk. So this one will be in 2 days talking about those topics, and then in a month, in September, I'll be talking about managing trades and setting stops and adding to positions and such. All right, so you can check that out at the link below. All right, so let's get into this. Again, I'm going to go into the indexes, some breath readings, get an idea of what's going on in the market. All right, so here is the S&P 500 weekly that goes back to 2022. I want to keep things really simple here. 2021 was a good year. It was like up. 2022 and 23, we got a large cup and handle pattern, as you can see me drawing here. We got a breakout over here. Volume was pretty good. We rally up, we come down and test the 21, we rally up, come down, gap below the 21, but immediately recover, and now we're heading up again. Everything here looks good. Okay, we got to move up in 21, a big pattern, essentially a sideways pattern for 2 years, a breakout, higher highs, higher lows. Everything is looking good. There's nothing in this simple chart that would suggest anything other than an uptrend. Okay, volatility has definitely increased over here. These candles are much bigger than they had been. Okay, when you compare them to over here and over here, so that's very notable. And I know from a trading standpoint, if you're a swing trader, certainly this straight down, straight up is frustrating to work with. Okay, so I'm not talking about trading here. I'm just talking about the trend and the health of the market. Overall, the market's doing just fine. Higher highs, higher lows. The market is moving from the bottom left of this, bottom left here to the top right. The trend is up. That's what it is. Now, could it top? Could we be in a topping formation? Could we look back a year from now and say this was the beginning of a top? Sure, we definitely can do that. Okay, but looking at this chart, the market's doing just fine, and we would be wise to lean bullish and play those, charts. All right, next, here's the Nasdaq, and as you can see, as I flip from one chart to the other, let me do that again. Like here's the S&P, here's the Nasdaq, here's the S&P, here's the Nasdaq. They are identical. Okay, cup and handle pattern here, breakout, volume super strong here. Rally up, test, rally up, big test, now going up again. So volatility over here is an issue, no doubt. Okay, I'm not talking about trading. I'm talking about just long-term trend. Higher highs, higher lows, 200 moving up, 50 moving up, 21 moving up, 8 moving up, 8 above the 21. It's been above the 21 for almost a year. The trend is up. I don't want to say we're in a bull market because this is a big move down over here, but we definitely should be favoring the upside, and this is long term. Here is the Russell 2000. Actually, it's the Russell 2000 ETF. Big consolidation pattern for nearly 2 years. Stock index breaks out, but then it settles into another range at a slightly higher level, and then we get chaos happens where we break out, volume's really good, get clobbered, volume again is pretty good, and now we're going straight back up. Okay, so this is a mess. Okay, this is a total, from a trading standpoint, this is a total mess because you get a breakout and you think, all right, small caps are going to be in vogue now, we can play small caps, but then they get clobbered back into the range and then they move straight back up. So overall, you could say the trend is up, although we're, this high is going to be matching up with highs from over here. The trend is up, but from a trading standpoint, it's hard to deal with because you got straight down, straight up, straight down. Okay, so biases to the upside. This is not easy to trade, not easy to deal with, but the reality is this is not the worst situation. I mean, even if we got some sideways movement here like that, okay, maybe we're not trading a lot of small caps. or actually, what I should say is, just because the index is kind of a mess, the fact that it's doing this provides a backdrop that's, trending higher. And then when you look within the small caps, there are definitely some really good patterns to play. Okay, I don't trade the indexes, so it doesn't matter to me if these are kind of messy. I'm just looking at the overall trend and health, and I'm going to drill down into the indexes and find some good charts to trade, because this is the Russell 2000. There's 2,000 stocks in there, or not quite 2,000. There's almost 2,000. But if this has been trending up for over a year, I don't trade this. I don't care if it's messy. I'll look within the index and find some good charts to trade. All right, one more here. Here's the S&P 500 daily chart going back to the beginning of this year. Volatility is high, no question. It's been harder to trade. This was fantastic to trade. Gentle, move up, consolidate, move up, consolidate, move up, consolidate, move up. Consolidate a little bit. I mean, that's as perfect as you can get, to just move up and over, up and over, up and over, from bottom left to top right. Everything looks fantastic there. Then the quality of the trading ideas significantly declined over here, so we knew a pullback was coming. So we got the pullback, moved sideways, false breakout over here, and then it just got clobbered, highlighted by news of the carry trade being unwound. And then we've gone straight up from there. So this is kind of frustrating. I'll admit it. This is straight down, stops out. Any long you have is going to get stopped out. Then we're straight up without even really a pause. There was a little pause over here on day 3, but otherwise it's just been straight up. So the charts went down, and if you're thinking okay, no problem, this is a dip within an uptrend, the charts didn't set up. We didn't get this. Okay. We didn't get that where charts based for a little bit, formed patterns, moving averages moved in a certain way, and then we got a round of breakouts to play. We didn't get that. The charts just went straight down, stops hit everywhere, and then straight up without forming any basis. So this is the mess. It's hard to deal with. Looking forward, there's a lot of scenarios that could play out, and I don't know if anyone could be truly confident that they know what's going to happen. We could certainly push higher and challenge the high. We could pause here, do something like this, and then just rip to the upside. Or we can go all the way back down. I mean, if this happened, why can't it happen again? I don't know if anyone could be super confident that something like that isn't going to happen again. So volatility high, big moves in both directions. Short-term traders, they're doing great. They're going long, they're going short, they're keeping stops tight. They're being content just to nail small moves over short periods of time, only holding for a day or two. Longer-term traders are doing mostly fine, but they've had to sit through some big drawdowns. Swing traders who want to hold for a week or two are thoroughly frustrated because trades aren't really lasting that long. So you got to make adjustments. It's as simple as that. Okay, the market changes. You got to make a slight adjustment, and that's just the way it is. If the market always traded the same way, then you could figure that out and just do the same thing over and over. But the fact that the market changes, that's where good traders get separated from bad traders, because a good trader will make an adjustment, a bad trader won't. Okay, a good trader will say, hey, I can only hold for a day or two instead of a week, whereas a bad trader will keep using yesterday's holding time. Okay, a good trader will, they'll just make the adjustments. If they could add to positions over the course of several days and push and trail it with a stop, they'll do it. But if they realize that hey, that's not what the market's offering, I just got to take quick profit after a day or two, then they'll do that. Okay, so going forward here, I don't know what's going to happen. I don't know if anyone knows what's going to happen. We could certainly pull back again. We could pull back kind of hard. If the S&P dropped from 5,500 down to almost 5,100 just because in 3 days, just because of the carry trade, it could do that again. You're a fool if you think that's off the table. So I can't really say the trend is up. I mean, in the very near term, it's up, but are you going to really buy over here after we've just gone up 7 days in a row? So charts are a mess. Trading's not easy right now. Got to make adjustments. Got to listen to what the market's trying to tell you, and don't force yesterday's trade on today's market. All right, let's look at some breath readings. Here's the S&P 500 versus the Okay, 5-day moving average of the NYSE line. The point I want to make here is that during a downtrend, which was down here, which is over here in 2022, we got many plunges of the 5-day moving average below a minus 1,000. Okay, but when the market's acting well, when it's trending higher, you can see that there are very few downside plunges. Okay, simple as that. Okay, the indicator tells you what kind of market that you're dealing with here. So we got a big move down here, but we didn't get any type of downside plunge here, which tells me that this pullback here is pretty innocent compared to, say, this pullback here where we got a much bigger drop. Okay, this pullback here is much more characteristic of a dip within an uptrend than the beginning stages of a downtrend. Okay, next is a cumulative AD line. You can see here higher lows, higher highs. That's a big dip. Okay, I'll admit it, but look, the AD line barely budged to the downside. Okay, compare that to even last August, September, October, where we got an extended move down, a move below the 21-day EMA, lower highs, lower lows. For you could tell that like this is much different than what we're getting here. Okay, which tells me that this is what takes place with with a dip within an uptrend, not at the beginning stages of a downtrend. Okay. Here's Russell 3000 stocks above the 20-day moving average. The point I want to make here, 2 points, is number one is like this is an acceptable pullback within an uptrend. Okay, it's not that much different than other prints. Typically, if the market's in bad shape, it's going to go much lower. Okay, we've certainly gotten a lot of lower prints at previous times. So this actually isn't that bad. As bad as this was over here, beneath the surface, it wasn't that bad. And then the second thing I want to point out here is that in a mini downtrend, which took place, last August, September, October, you get these prints, they get trapped underneath 60%. So we'll see what happens here. Okay, if this comes up here and gets rejected and comes back down and goes up and gets rejected and comes back down, then we're going to have more weakness over here. Okay, but if we get above 60% here, market should be all right. Okay, that's what I'm going to be looking for over the next week or so is can this print get above 60 or will it get rejected and pull back? Because that'll tell us if we're going to get maybe something like this or if we're going to get something like, over here where it recovers with prints above 60 and we get a continuation of the trend. All right, next is going to be Russell 3000 stocks above the 50-day moving average. Same thing I want to point out here is that this print, as bad as this was over here, like that print is better than here. It's better than here, certainly better than over here. We're already above 60% over there. So like that's not bad. I mean, as bad as that was, beneath the surface, there were a lot of stocks that were able to hold their 50-day moving average, which tells me that this is more like a dip within an uptrend than the beginning of a downtrend. Here's the S&P 500 versus the 1 month high low. What I want to point out, and it's similar stuff. I mean, not all this stuff is like isolated and unique. They all read similarly. Within a mini downtrend, you get the 1 month high low is mostly below zero. Okay, this is the zero line here, so you get mostly below zero, which leads to this type of price activity. So the fact that we got a big plunge here, that's fine. It happens. We got a plunge here, got a plunge here, got a plunge here. Even within an uptrend, you get plunges. Then the question is, can it recover? If it recovers, then the market's in good shape. So if we get prints like mostly over here below zero, then the market's going to struggle. But if this indicator, if this print gets above zero, and does this, then the market will be fine. Okay, so that's what we're going to be looking for. Do we get this or do we get this? Right now we're kind of at the threshold in the middle, and we'll see what happens. Okay, last chart, similar. This is S&P 500 up top versus a 3 month high low. Okay, same thing, that when the market struggles, you get prints mostly below zero. Happened over here too. Okay, market moved up. We got prints below zero all through here. Then when it got above 0, then the market did just fine. Drop below 0 over here, market struggled. When it gets above 0, the market does just fine. Okay, so we got a plunge here. That's normal. We've had lots of plunges. So the question is, does this print get trapped mostly below 0? Okay, which would suggest we're going to have, at least some flat volatile trading or some downtrending movement. Or does it get above 0, which would imply we're going to have a continuation of the uptrend? All right, so the sum of everything that I've showed you here tells me that what we've had so far, even though it was volatile and even though it's been frustrating for swing traders, is what we've had so far is a pullback within an uptrend. And it just doesn't mean the market's just going to go off to the races right now, but we've had a pullback within an uptrend, not the beginning of a downtrend. The market overall is in decent shape. Okay, we can certainly get a lot of volatility going forward, and if these indicators change, then I'm going to certainly change my tune. But for now, I say the trend is up. The market is doing okay. It's not as healthy as it was. Volatility is high, so trading is challenging. But as of now, I don't see evidence that we are in the beginning stages of like a big downtrend or a bear market. I'll change when the market changes. All right. Hope you got something out of this. I will see you next time.